Hey everyone, and welcome to Earnings Cheat Sheet for Friday, February 20th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, we're getting kind of toward the end here of earnings season, but what do you have on tap for us today?
Yeah, maybe near the end, but it's a big bang with Nvidia for sure. That's going to be huge. Also want to take a look at TJX and a recent IPO, Medline.
All right, well, let's start with TJX, which is scheduled to announce Q4 earnings on Wednesday, February 25th. Earnings for the discount retailer are projected to rise 13% to 139 per share, while revenue is expected to climb 7% to $17.35 billion. And here's why we're watching TGX. We'll want to know how strong same store sales are with a tough year earlier holiday comparisons. And we'll also want to see if TJX is still mitigating tariff impact. And Ed, TJX is often kind of viewed as maybe a bellwether for the broader retail sector. And a major theme has really been that ability to attract higher income shoppers that are maybe trading down from department stores. So I guess in addition to same store sales, maybe looking for mentions of increased foot traffic might be important there as well.
Yeah, and this has been a solid performer, earnings and stock wise for a long time. It should have some, steady earnings growth in the low double digits. That's supposed to continue. Revenue growth is in the high single digits. Definitely don't want to see that fade off. Yeah, this is just a solid performer. It's probably not going. It's not going to be one that's going to have, quadrupled earnings growth out there anymore. But it's a solid performer, and just yeah, want to see how that continues if they are handling the tariffs. And at some point, the tariffs will become sort of like a given, but I probably not for a few more quarters before you can start feeling like, okay, this is the new normal. I mean, it's certainly on a year over year basis.
Well, I think consistent is probably something we'll take here with the market being so back and forth so far this year. But let's go ahead and look at the chart and see what the story is there. We see TJX in a flat base with a 159.48 buy point. It looks like it had this nice bounce above the 50-day line on February 17th, maybe getting near some recent highs here, Ed. So potentially actionable ahead of earnings. But tell me your thoughts here.
Yeah, I think at this point, if you got above those recent highs, it would be actionable, but earnings are coming up, so that's the issue there, and you just don't know how that's going to go. And there are some pretty big moves. Last time, like there's been the last couple of quarters, it's moved and then given up gains quite a bit. So there's that. And the previous one, big move, then came back down. So it's just something to watch out for. I mean, that's often it's earnings season is always the day after earnings or the day of earnings is always wild. But yeah, so let's see how that one goes. You could use that or just use the traditional breakout. Either way, it's not too far from the 50-day line. I think if you go on a monthly, you can just sort of see how TJX has performed really well. I mean, the relative strength line, has been quieter over the last 10 years, but still been trending up. And before that, there was a stronger pace. So, this is definitely one that can be a part of a portfolio and often for a long time.
And I'm just jumping back to the weekly here, Ed. TJX has a pretty good EPS rating of an 88, composite rating of 87, a nice accumulation distribution rating of a B. Tell me some more thoughts here on the fundamental picture. And again, just you can see on the weekly chart here a little bit more long term, just sort of this nice, as you mentioned, just consistent, solid uptrend here over the last few years for TJX.
Yeah, I mean, the fundamentals are solid, and it's nice to have that kind of situation. That could change. I mean, they can always change, but they've managed things pretty well during some wild times. And so these are, the TGX is one of the leading off-price retailers, just so people know. It's not, so they'll take offloaded goods from other retailers and a lot of apparel or home goods, depending on the various chains. And it's just, they have, that treasure hunt and other things has been a real recipe for steady growth for a long time.
No, especially targeting some of those younger Gen Z customers. Ed, let's go on and move on to take a look at Medline, recent IPO here, expected to report Q4 earnings on Wednesday, February 25th. Earnings for the surgical products provider are expected to come in at 24 cents. That's down 41%, according to Market Surge. But the year earlier, pre IPO is maybe a little iffy for comparisons here. And revenue is projected to increase 11% to $7.51 billion. But again, making these year over year comparisons is a little bit iffy with such a recent public offering. And here's why we're watching Medline. This is the first post IPO earnings report. So we want to see how Medline is doing and check some of the growth prospects. I think key to some of those gains will be Medline's prime vendor relationships. This is where they go get a new client, a new hospital system, doctor, what have you. And Ed, this prime vendor flywheel, I think, is really the key here for some margin expansion. Medline typically aims for about $1 billion in new business annually in this segment. So definitely any comments here will be key.
Yeah, absolutely. And, this is a big company. It has $7 billion in quarterly sales in the last one, according to, again, pre-IPO. And there's one why it's iffy is that sometimes the numbers are grouped together. And so you don't really know if the quarterly sales or quarterly results are really for that or if it's by the right measurements. Uh, but yeah, this is, so it'll be interesting to see because there was growth before. Is the growth really falling off or is that tricky? Yeah, want to see what is their path because sometimes you just don't know. You just don't know. And sometimes that first IPO earnings report can really surprise to the upside or downside. And just so definitely one to watch. There's a number of IPOs that have been working well lately, despite a choppy market. I mean, it's actually sort of surprising because you can imagine investors going, I don't really know this company. I'm going to stay away from it and on a risk off environment. But a number of them have been doing well, including Medline.
And let's take a look at the daily chart because we see Medline IPO'd here in December. It quickly built an IPO base with a pivot point of 45.50. It's in that buy zone, but we've seen some volatility here, a lot of chop. But Ed, it's been respecting this 21-day line. So how are you approaching something like this ahead of earnings?
Yeah, I mean, this had a few opportunities that broke out. Often IPOs will fade, and especially in this kind of environment where the market has been sort of choppy. So it's broken out a few times. That makes it a little tricky. When do you jump in, onto something like that? Obviously, it looks like this week it's, this current week it's moving up in there. But if it works, if it breaks out from here, it may look pretty extended. And if it sinks, well, then you probably don't want it. So there may not be an opportunity after earnings. It could be because it obviously is in a buy zone right now. Relative strength line is at a new high. So a lot of things going on. As you say, the 21-day line has been pretty good support. So despite the chop, there's been an uptrend. It's been holding some short-term levels. So definitely something to like about how that's been going.
And as you mentioned, when we look at the fundamentals, Ed, again, pretty iffy to make comparisons here, since we are in a relatively new IPO situation. But how would you assess the fundamental picture then when it comes to something like Medline?
Yeah, I mean, they've had some decent sales growth, and there was decent growth from 2023 to 2024. Just want to see what that's all going on. It's like there's real trends there. And yeah, I think we want to see what is the path. That just makes it tougher here when you don't have those fundamentals. I will say that the IBD podcast, this week's guest is going to be Greg Morton returning, and he covers IPOs a lot. I know that he's been really interested in Medline, so he probably will have be speaking it. So then when on that case, so if you're listening to this earnings cheat sheet, you can head over to the IBD podcast and get some more detail on this name and some other IPOs that are acting well, I assume.
Yeah, we'll make sure Justin covers this one in his conversation. All right, well, let's move on. The big drum roll here next week will be Nvidia, which is scheduled to report on Wednesday, February 25th. The AI Titan is expected to see Q4 earnings up 71% to 152 per share, and revenue is expected to rise 50% to $65.67 billion. And here's why we're watching Nvidia. We'll want to see if NVIDIA can get enough capacity at Taiwan Semi to produce its chips. We'll also want to see if NVIDIA can fend off some of these custom AI chips entering the market, like Broadcom's. Perhaps maybe the deal with Meta showed that it can. And we'll also want to hear how the transition from Blackwell to Rubin later this year. Will that be an anticipated bumpy or smooth transition? The company's upcoming GTC conference with the keynote from Jensen Huang on March 16th, maybe more important than earnings here at this point. And again, I think it's just getting harder and harder, even if NVIDIA beats some of these whisper numbers, getting harder and harder to keep up some of this growth, especially now as investors are maybe sensitive to a lot of this AI spending.
Well, the good news is that there is so much AI spending. At some point, the investors may, throttle the CEOs of those hyperscalers and say, "Stop spending so much money." But that has not happened yet. I mean, so one would imagine that that massive torrent, even from what we thought of 3 months ago, that the AI spending will rebound to NVIDIA for the short term. I mean, even if yes, some rivals, even if AMD and Broadcom and some others get some of that money, a lot of it's going to NVIDIA. I mean, that's just and certainly in the short run, it seems like constraint is like how many chips can they make? Can they make that transition then from Blackwell to Rubin? So those are the issues, but clearly demand's not the issue. And in fact, earnings picked up in the latest quarter. They're supposed to pick up again. Then they're supposed to pick up again. So it's amazing the growth. It's sort of like, it's sort of like somebody in a marathon, 20 miles in, and then there's that guy who says, "I'm going to take off," and produce from the pack. It's like, how can you do that? And that's what NVIDIA is doing. These are not easy comparisons. And I think that's because Blackwell is really ramping up. Then the next issue would be the Rubin. Can they make that transition? Either themselves or Taiwan Semi, and so on. But really just jaw dropping the growth that they have. And yeah, can they continue that pretty blistering pace that they're going on?
And I'd love to get your opinion because we've seen the software sector really struggle. I think a lot has been made of this SaaS apocalypse potentially happening. So, if we do continue to see some AI cannibalization with software, especially when it comes to software budgets maybe being rethought a bit, do you think that maybe that could impact that maybe the chip buying spree in 2027 might be in jeopardy, or do you have any thoughts there?
Well, it seems like if you do believe that software will be disrupted, then you're saying that AI is worth it. If you could disrupt software, then that implies that all that spending on AI is worth it by other companies the software companies that may struggle, but it means that Google and others, they will do it, if only for preservation, self-preservation to be in that environment. So they may be a positive there, but what Nvidia's earnings are just going to be absolutely enormous for so many other companies, all these other suppliers or other things, energy companies, heavy construction that are in there. Some may be negatively hurt because if Nvidia says, "Aha, we're doing this," then somebody could be hurt. But generally, what Nvidia has to say, if they have positive things to say, that should be good news for a whole slew of AI firms, AI hardware, not necessarily software names. So yeah, that would be something to be looking for. But yeah, this is just going to be an enormous report for the market.
And we're on the daily chart here, Ed. And Nvidia shares haven't really done much over the past year, but right now consolidating with a 212.19 pivot. Could maybe look at this area around the 193, 194 level as some recent highs, but kind of been trading around its conjoined 21 and 50-day lines here. So, talk to me about Nvidia's charts and what you're looking to have set up here with earnings ahead.
Yeah, I mean, just very in the short term, yeah, there's this base. I think if it got above 194, there's a lot of short-term highs there that would be getting. So the 194 area, that would be a place where you could enter after earnings. Uh, so and more longer term, it's been going sideways. Really been going sideways since August. I mean, there was a brief move up to 212, but basically we're at 186. In early August, we peaked around 184. So it hasn't gone anywhere. And just to put in perspective, well, I mean, we had earnings shortly after that peak in August, and that earnings was for the April quarter, and they earned 81 cents. And now it's supposed to earn 152. So the earnings are basically going to double in just a few quarters, like 3 quarters, and the stock hasn't gone anywhere. And if you go to a weekly chart, the PE, it's already cheaper than Walmart. It's just crazy. With Walmart is not growing nearly as fast. But if you go to a weekly chart, the forward PE on Nvidia is very low, and it's just not. So that one, a lot of margin, and that happened before. Again, on a weekly chart, if you look, and this was even lumpier, but we don't really would pause from like mid 2024 all the way. I mean, yes, I mean there was huge drops in there, but ultimately it had this long range from April 2020 or mid 2024 to almost mid 2025. So there was a lot of earnings compression. So just because it's been going sideways for a while and the earnings are great, doesn't mean it will take off. It could People could say, "Well, what are you gonna do for me next year and the year after that?" But, having this pause with that tremendous growth, and you see that green earnings line that continues to soar, uh, you know, that that's a really that would be a positive thing. One further note of caution, there had definitely been a number of times in the past year where NVIDIA will surge on earnings, but then either give up those gains later that day or the next day. So don't get too excited if it's up 7% overnight or even at the open. There's definitely been situations like the last time it reversed lower. That was an ugly day. That was a bad day for the market. That was really negative. The prior time it came down, so it doesn't have to work out. That's what I'm saying. Is or it doesn't have to. What it does with the open may not be where it ends.
All right. Well, those were some of the big names on our radar, Ed, but there's always more to take a look at. So, why don't we start with BWX Technologies reports there on February 23rd? And looks like it attempted a breakout here above a 218.50 pivot, but again, failed to really advance from that point and looking for support at the 21-day 200 level.
Yeah, this one, I think a strong move from here. It's already almost at a trend line, so I think any kind of movement from here would be something that could be actionable. That is essentially looks like it's got a short new consolidation, so you could treat that high at 220 as its own sort of, or the recent highs 220 or so as a sort of another buy point as well. So strong name ultimately held up, not great, but a lot of things have come off. And so I think it's definitely one that people should have their eye on.
We looked at TJ Maxx, but there's another big retailer reporting next week. That's Home Depot. This one, again, looks like it attempted a breakout out of a cup with handle base, 390.60, the pivot there, but testing the 21-day line.
Yeah, it would be. I'm more interested in this and see what they have to say about the economic climate, maybe the climate for remodeling and other things. This has made a move, but yeah, it's struggling. The growth just isn't tremendous. It seems like there's some stronger growth maybe in some of the builders or some suppliers, but definitely one to be watching here.
And how about we take a look at NRG Energy earnings there due on February 24th. Another one in consolidation, 180.54, the traditional buy point there. But looks like it made this kind of nice move back here on February 10th or so above the 50-day line and has been trending higher. So thoughts here on NRG.
NRG, yeah, maybe it has a handle by the time it has earnings. So that could be interesting. Some pretty solid growth. It's a little lumpy. I mean, 37, 84, 2, 32. Those are some interesting. You think that the power is on consistently. I don't know why there's that. Maybe it's the wholesale level and the power rates are fluctuating, but it seems like demand is pretty high overall. But there's definitely been fluctuation on that front. So that's a little bit, but overall, there seems to be steady growth on an annual basis. So that'll be interesting to see how that one goes. It could be something that's actionable.
All right, how about we take a look at Vistra earnings there on February 26th? This one has been in a little bit of a downtrend here at trading below the 200-day line. It looks like it got back above the 50-day last week. But thoughts here?
Yeah, it needs to get about the 200-day line. Maybe then you could do something as sort of an early entry. But yeah, this utility, I mean, it's supposed to have stronger growth next year. I think people definitely want to see that because some losses, some really big declines. But that's supposed to turn around next year. I think people definitely want to see that.
How about we take a look at FTAI? That's FTAI Aviation. This one had a nice bump. I think we're looking for some of these power solutions for data centers, and people are turning to potentially jet engines here to help with that. So I think FTAI has benefited from that. Has really made a nice move after breaking out back here on December 30th from this cup with handle base and. Again, looking around this 300 level here as a potential area to break above. So thoughts here.
Yeah, so it'll be, finally get an earnings report and see what they have to say more because yeah, it's a real paradigm shift. I mean, this was leasing out jets or some other parts, and now we're going to become an AI energy play. So obviously, a big valuation shift on there. The growth had already rebounded on other things, so the earnings aren't going to reflect the jet engine stuff, the AI data center stuff yet. So, but that's what people are really going to be interested in. But I do think, yeah, the 300 level, 310 would be a place where people could be buying this name. It's a short consolidation, but it'll be getting closer to a flat base by that point.
All right, how about we jump on over to Bright Spring Health Services earnings there on February 27th. Another one here, it looks like it's maybe been consolidating a bit around the 40 level. So thoughts here.
Yeah, I mean, you can sort of treat this as a flat base because it never closed above the 4103 high until yesterday. Until this like so it was a flat base kind of thing. There's a 4 weeks tight on a weekly chart with a 4126. So there's definitely action. It bounced off the 10-week line. The fundamentals are strong. I mean, huge growth in 2025, but solid growth continuing in 2026. So up down ratio 1.3, a lot to like. Funds ramping up quite a bit. So yeah, solid performer, for sure.
All right, how about we take a look at Rocket Lab due on February 26th? I'll jump back to the daily here, Ed. This one broke above a cup with handle base on December 29th. It ran up about 38%. It's pulled back and testing the 50-day and 21-day lines.
Yeah, so it's right at the 50-day line, a little below the 10-week line. It found support sort of at the top of this prior base, sort of. I mean, this one's really volatile, and, this one has, big ups and downs. So I would just, be cautious ahead of earnings, but, a lot of potential with this name, and you can see the accelerating revenue growth in the last couple quarters, going on.
Yeah, right. Nice growth there. How about we take a look at Amer Sports earnings due on February 24th in a buy zone after breaking above a cup with handle 40 pivot point here, Ed. So, what would you do with this out of earnings?
Yeah, I mean, head earnings is I mean, if you bought the breakout, you don't have any cushion. I mean, so there'll be a decision to make. The relative strength line has been picking up lately, so it's sort of at the highest level in several months. Still not at highs. Yeah, just have to see how this one goes. There's this earnings are strong. This has handled tariffs well, but you could buy an earnings gap up, or if it stays pretty close, but you don't know. It could tumble on earnings as well. So I probably should be waiting until earnings on this one.
How about we take a look at Pure Storage due on February 25th? And, we've seen this area doing really well with computer data storage, but Pure Storage chart maybe not reflecting that right now. Seems like it's been in a downtrend since hitting a 159 high in November. But again, testing a lot of these key moving averages here ahead of earnings.
Yeah, maybe they're paying too much for all the flash things for their flash storage systems. Yeah, big sell off on earnings last time. I mean, maybe there's something you can get above some short term highs on earnings, but yeah, this one's very volatile. You can see big moves on earnings the last couple of quarters, and I've seen that with a lot of this thing. It has big moves on earnings.
Right. How about we look at Quinity Electronics due on February 26th at another recent IPO back in October. It formed a cut base and it's trading just above a buy zone here. But tell me about Quinity.
Yeah, so we've only had one earnings report from this. Is actually a spin-off from DuPont, of all things, but it's so the growth has slowed the last few quarters. So I'd be interested to see, well, how's that going to run? Obviously, the stock is moving up. There's excitement on this in this chip equipment space, and the group is great. But I definitely want to see that what's the growth prospects going forward, because you want to see that turn around.
How about we take a look at a couple Bitcoin miners, starting with Cypher Mining, due on February 24th. Another one here that hit around high around 25.52 back in November. It's pulled back, but it seems like it's just trying to find its footing here. But again, trading below the 21-day and 50-day lines.
These companies are moving around, but a lot of them, and I don't know how much these in particular do, how much is still related to Bitcoin. A lot of their business is still Bitcoin, and that's going to be an issue. That's an issue that it's really hard to make money. So I think you need Bitcoin to rebound. I mean, maybe something will happen and they'll make some great news and everything, but it's just hard until you really while that transition's going on. But one to watch, it could go on another big run, but Bitcoin being so weak is a real headwind for these names.
Yeah, and TeraWolf also reporting next week on February 26th. This chart looking a little bit better. It looks like it actually tried to break out on February 10th from this consolidation, 1705, the pivot there that has pulled back. So again, another name here that potentially Bitcoin not helping.
Not helping. I mean, if this one breaks out, I think that would, yeah, if it gets above there, I think it could be actionable. Again, I don't know the details on this one relative to how much is Bitcoin, how much is that, and or how much people are expecting for this 2026. Maybe this year you'll see a huge surge in the AI data center space, and that makes it so the business will be more of a shift over. But yeah, definitely that's the concern there.
All right. Well, let's keep going with Ionis Pharmaceuticals. Earnings there due on February 25th. And it looks like we had a gap up here back in September, Ed, and trending nicely. It's been consolidating a bit, potentially looking at the 86 level here, maybe as a potential actionable area.
Yeah, kind of like maybe a bounce off the 50-day line. There's a lot of things. It's sort of, yeah, going sideways for the past couple of months. There's earnings, and it's not supposed to be very strong. It's like the numbers are supposed to roll over. I know that they have, it's wider losses. I know they have a number of drugs in development, but we may not get any information on that, at this report. So uh, it's always unclear because you can see that big gap up. I can't remember what that news was, but that wasn't on earnings. So, that this may not be as pivotal as it is for a lot of these other companies.
All right. And how about we take a look at a couple software names just to round this out, starting with Salesforce due on February 26th. Again, the chart not looking spectacular here at in a downtrend, trading below all these major moving averages. But again, we've seen this sector getting hit. So I think Salesforce, what they would have to say, could be important for some other areas of the market.
Yeah, I think we're trying to see it. But it's hard to know what can you say. I mean, what can you tell me that in 2 3 years that you won't be disrupted? Because the results will be the results. The next quarter results will be the results. Nobody expects Salesforce to be disrupted next quarter. It's just a question about, well, and even if you don't get disrupted, if your customers are disrupted and now they don't have 100 employees, 100 seats, they have 5 seats, something like that. So those are the kind of questions that are existential for Salesforce and for all these names. I mean, some may do better than others. I don't know. I don't know. But part of it, it's not just that, even if you don't believe, it's just that the uncertainty. It used to be you'd be pretty stable. I mean, look at the growth rates. Okay, it's been bouncing here, there, but there's usually pretty steady growth for these companies. The valuations have come under attack in part because if you think, wow, I mean, it's not, you could have a real change in the next few years. And so I think software had somewhat elevated valuations because you felt you could count on it. And now maybe not. So yeah, this is a no-go. There's a lot of other companies look better than Salesforce, but I think this one and maybe Snowflake really need to see what are we going to, how can you convince them? We need to see something to turn it around. Snowflake is trying to bounce a little bit, but we've seen bounces before. It's bounced a few times, just like software in general. What can you say that will convince people that this company or this sector is going to be okay? And I don't know what you can say that would be convincing in the short run.
All right, Ed. Well, thanks so much for your insights today. We really appreciate it.
Thank you, Lexi.
All right, that wraps it up for this edition of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. And we'll see you right back here next week. Thanks so much for watching.